All right. Good morning. Welcome. It is June 22nd, 2023, 9:20 a.m. And we are back with another market open. I am your CNBC daily contributor reporter, Amit, which is why I'm wearing this shirt, because I'm now a professional. So I need to act. I really like this shirt because it fits well. I found it in my closet today. I was like, you know what? I want to look a little nice for the market open. I don't want to look like a scrub wearing his t-shirt and his hoodie trying to analyze the financial markets. I need to be suited up. I need to be a suit and analyze the markets today. So I think I'm going to order more of these shirts. They actually fit really well. I know it's wrinkled because I haven't worn this shit in like 5 years, but I think I'm going to order more of these, and we're going to do the market open as a suit. We're going to become a suit. This is how we're going to be a cool suit. Bay Ray, good morning. iBot, Jared, Felicia, Seth Roth, Pete, Joseph, Mr. Russo, Fernando, Daniel, Suri Baba, Thomas, Dex. Thank you all for being here, and welcome back to another market open. All right. So markets are red. Markets are indeed red. I'm going to pull up the charts right now, and then we'll get into some of the news that we have. Markets are red. Palantir looks like it's heading below 14 today, just given the kind of way it's at. And a lot of stocks look like they're falling pretty badly. So you've got Palantir down about 3% in the pre-market, $14.17. Sofi down 1.16% at $8.54. And if you look on the left-hand side of my screen, we've got a lot of red. Robinhood acquired a company today. They are red right now, down 0.31%. We'll talk about that in a little bit. Tesla at 251. This is a stock that was 276. Just a couple of days ago. So, I mean, all of this is a healthy pullback, in my opinion. It's a healthy pullback before we enter into a massive bear market. I mean, stocks were up 140%. NASDAQ now 13,500 as well. Stocks were down 150% to start over the past month. And so, stocks that go up that aggressively, there's only one option for them, right? They can keep going up, but more likely than not, they have a little bit of pullback because people take some of their profits, the market corrects, and you get more opportunities to buy on the dip. So I think, for those that have been hoarding up some cash, been saving a little bit, I don't know if today is the exact day to buy. You can look at Enphase, 167. Wow, 165. Wow. Enphase was a stock that went to 152, got all the way back to 188 after falling from 220. Now it's at 165. This is a day where if you've got some money to DCA, you start your DCA, or you keep on doing your DCA if you've already been doing your DCA. I do not think this would be a day to go all in because there might be some more pain ahead of us. But this is what's going on. Now, there is some macro news that potentially could be related to this. The Central Bank of England raised interest rates by 0.5 percentage point, so 50 basis points. This is a bigger rise than its peers as it seeks to curb the highest inflation rate in the G7. Obviously, Europe is having some more struggles with inflation, especially with the United Kingdom. So we are getting some interest rate rises across the world. The United States is the only place that has paused. I mean, some other places have paused, but then they started again. And the primary reason was because Jpow thinks that we are okay, but we're not fully out of the blue yet. And so until we get out of that, we're going to be in a tough situation. Bitcoin holding strong at 30,311. So Bitcoin is doing nicely as other stocks are going down. Robinhood at 976, Square at 65, and PayPal at 67 as well, not being affected too deeply by things going down. Salman was up. No notifications, but still found you on search. YouTube needs to fix that, but Test Cap, I'm happy you are here. Thank you for being here. And yeah, hopefully YouTube can send you notifications in the future. Amit, I spent all last year building a Palantir position. Now I want to get into SoFi. Is now a good time, or should I wait for a stronger pullback? Okay, so that's a really good question. Personally, in my opinion, I think SoFi is definitely undervalued at $8.54. I do think that is the case. The problem is, given its run up from 470, it's still up 100% in the past month. And as a result of that, it just might have a little bit more downside to go in terms of pure macro terms before it stabilizes. The other thing about SoFi is that we are having a ton of catalysts that are coming up, including their earnings, GAAP profitability, student loans. The Supreme Court should be ruling on that, I think, like any day now, right? Within June. And so as the student loan thing gets resolved, that could be a major catalyst for SoFi. Whatever way it's resolved, it doesn't matter for their business. Their business is still going to benefit from it. But if it does go in terms of the context of student loans not getting erased for people, that's just going to be more and more money that SoFi has to be able to get onto their books. So we're going to see what happens from there. But I do think SoFi is fine as a DCA right now. I just wouldn't go all in because things could go down a little bit more. Let's get some mainstream coverage and see what the suits, the actual suits are saying in terms of what's going on with the markets, and then we'll keep going from there. Let's go. Actually, let's get some Tesla now. We're seeing where it's going from here. Well, this is Tesla and other stuff, but let's click on. I'll be right back. All right, let's share this.
Traders, they may be buying, but the street seems to be selling. We're seeing the markets on a 3-day losing streak, the S&P having its worst day of June. What do you think is causing this big shift in momentum? Is it just Jpow, or is there something else going on?
I think some of it is we've come a long way in a short period of time, but I think a bigger portion of it is what you alluded to, which is the commentary from the Fed. So we've had two messages from the Fed, really. We've had a pause, which is great. That's dovish. That's helpful. That's supportive of risk assets. But on the other hand, we've had very hawkish commentary, and we've had the dot plot come out and show that future rate hikes are being priced into the market once again. And so I think investors are struggling with the duality of that message. You know, we're sort of at a pause, but expecting worse to come on the rate hike cycle. And I think that's the short-term challenge that we're working through here.
Yeah, so if you look at the CME data just earlier today, it was about a 70% chance of a hike at the next meeting. Where do you stand? Do you believe that some of the things that Jpow was saying, basically saying they're not data-driven anymore and really pointing towards another hike, saying it's a live meeting, do you think that's just talk, or do you believe he's going to follow through?
Well, I think some of that is they're trying to hit two objectives here. One is to reflect current conditions, which they've done with the pause, and the other is to maintain some of the great credibility that they've built up with these rapid hikes in the past year or so. And so I think the guidance is really directed more at keeping those hikes potentially on the table. I lean more in the direction of lower probability of that hike. I think if we look at the conditions that have been causing inflation, whether it's money supply growth, which is all but dried up, supply chains, which have primarily healed. You look at inflation itself, it's come down pretty directly. So things are sort of heading in the right direction, and I expect them to lean a bit more on the current conditions side and perhaps stick with the pause. Okay. All data dependent, of course, in the next month.
All right, so you're a little bit of a contrarian. It kind of sounds like you're saying fight the Fed to a certain degree. I want to talk to you about something that we launched yesterday, the Magnificent 7 Index. We've been showing it all day here on CNBC. It fell more than 1.5% yesterday. That's the 7 stocks that really pushed the...
That 7 index everyone is obsessed with right now because the S&P is only up again because of those 7 companies, Tesla, Nvidia, Microsoft, Google, etc.
Market higher so far this year. So what do you make of this pullback? Is this a buying opportunity, or is this possibly a sign that with another hike, investors are getting a little bit wary about valuations here?
I think in the short term, we could be struggling for the next couple of weeks with some concern over valuation and with that adaptation to a potential hike being on the table. But I think if you look out past the next Fed meeting into the second half of the year, I think conditions are clearly improving. Inflation's been getting better. We'd expect to see that follow through to interest rates and to inflation, or excuse me, to valuation. And you've seen earnings expectations tick up just a little bit after the past quarter. And I think some of the changes that companies are making in response to the economic conditions are pretty favorable. So I look for...
All right, we've got the market opening soon. Dex, I agree with you. That 7 index is definitely going to tank when one of them misses earnings, which is inevitable. You know, one of them will definitely miss earnings. The question becomes which one is going to miss earnings and how badly are they going to miss earnings? And that's going to determine how bad it goes. All right, it's a red market, folks. We got about 30 seconds till the market opens. It is going to be very interesting to see how the market reacts. You know, Palantir teetering on if it falls below 13. Sofi, if it falls below 850. Nvidia, where's Nvidia at? 422. Yeah. When you got Nvidia at 422, the rest of the market's definitely going to take a little bit of a beating with it and go from there. Now, Amazon is one of those. Look at Amazon that's up. Amazon's one of the only big tech that hasn't had the massive run up like some of the other companies. Google along with them, but because Amazon hasn't had the run up, Amazon continues to get bought. So it'll be interesting to see if that drops today as well, with the rest of big tech following suit. All right, here we go. 3, 2, 1. Ladies and gentlemen, the stock market in the United States of America is now open. Wake your ass up. We've got Tesla opening down 4% at $248. Tesla is down at $248. We'll get back to Tesla. Robinhood at $9.66. Robinhood just acquired a company, so it makes sense that they're down because they have to spend some money. We'll talk about the company they acquired in just a little bit. PayPal at 67. Square 65. SoFi at 855. SoFi is down just a little bit. Palantir actually opens up a little bit. It was down at 416 in the pre-market, now at 1420. So it's 2.3% down. It was about 4% down in the pre-market. So Palantir actually holding up okay at 1427. We'll see where it goes from there. S&P at 433. It has finally declined. S&P was at 443, so it is down from the highs at 443. It was at 436 yesterday. So it's down from some of the lows at 436. Kava Group at $38.34. This one still hasn't massively declined. I mean, it ran up to $47. IPO'd at 22, still not a crazy decline. Market cap of 4.35 billion. Given, you look at some of their sales, probably doesn't deserve that high of a market cap, but investors are excited for the future potential and growth of Kava. Palantir now at 1421. Nvidia at 425, opening up from 422 in the pre-market. Nasdaq 13,453. So the Nasdaq opens down below where it was yesterday at 13,001 or 560. Nasdaq is down. C3 AI is also down 2.3%. Meta at 279. Apple in the green. Look at that. Apple is in the green at 184. Amazon also in the green. AMD in the green at 112. And Humana at 454 is in the green. Enovix is down. TFC regionals are down. Baba's down. Neo's down. DNA $1.71. Snowflake 172. The stock was at 193 just a couple of days ago. Now it's down to 172. Enphase. This is the interesting one. I did not expect to see Enphase back in the 160s. I personally thought we were done with that. Enphase Q2 is not going to go well. The CEO even said because of interest rates, solar financing, which is heavily dependent on interest rates because people can't pay upfront, is just not going to be good. So they're a Q3, Q4 story, and that's if we get some cuts in rates. If we don't get cuts in rates, then Enphase might get to some really juicy levels by the end of this year. And then 2024 is when the story gets a little bit better. The Qs are at $360, down from $372. So whoever bought SQQQ, you might be up right now. Let's go to SQQQ. You probably are. Yep. SQQQ up. It was left lows of 18 and now it's at $20.34. This is how you basically hedge against the Qs. You buy the short version of it. And if the market goes down, then this goes up. And Netflix at 422. Actually, haven't seen Netflix in a little bit. Uber also at 442. Uber was stuck in the 35 range. Now Uber's at 42. I haven't looked at Uber in a little bit. All right, so let's see some comments, and then we'll keep going from there. Tesla recovering now at 254, so not too bad. Looking to close my shorts and buy some more Enovix. Yeah, we're still going to do the Enovix, I think, on Sunday or Monday episode, so we will talk from there on this company. It's really exciting the more we look into it in terms of the context of batteries. Amazon got another upgrade today. Who upgraded them? And what was the price target that they got on the upgrade? Look, it makes sense that Amazon got upgraded. Again, they've doubled revenues since COVID. And they are almost at like maybe 15% above where the stock was in 2020. Remember, they ran up massively, but then they came down massively because after the pandemic wore off, the sales kind of dried up as well. So I think investors are expecting CapEx decline and that normalization of CapEx decline, along with the impact of layoffs. To remember, they were laying off 9,000 people just a couple months ago, to really start impacting the profitability of the business. And also if they can start eking out a 2% margin on the retail business that currently has very like 0 to no margin, or even negative, that is also another source of growth for Amazon in terms of profitability. Markets to open in a minute. See you on the other side of this red day. Yeah, we definitely got a red day. But Palantir will run back before it's 16s before the ER. I mean, I don't know. It's going to be interesting to see. Again, remember, even though Palantir is down, it is up considerably. We've gotten a pretty nice premium since, since May 4th or when it was at $7.28. I think for it to run up before earnings, there would have to be some information that the banks think they have access to around growth in Q2 being a great. Most of us can expect growth in Q2 is not going to be phenomenal, and we got to give them until Q3, Q4. But let's see. It can also just run up with the macro, to be honest. We're in a little bit of a natural macro decline when every stock is red, and it's not just one of them. This is a macro thing. And so if that's the case, as the macro gets better, Palantir might be a beneficiary of that. Sofi now at $8.43. Sofi down 2.32% to start off the day. Let's take a look at the company that Robinhood acquired today. Robinhood's becoming more and more interesting to me the more I look at it. Obviously, $6 billion in cash. $8 billion on the balance sheet. Very soon to get GAAP profitability. It's a tiny company. The biggest bear cases with Robinhood again are that their MAUs were declining, the monthly active users, and that payment for order flow is a crappy business. If MAUs start going up in a bull market, payment for order flow is not that crappy of a business because you've got more people, right, that are just ultimately trading at the end of the day. This is guarded. Let me click on another one. Okay, let's click on this. Robinhood has entered into agreement to acquire San Francisco-based X1 a platform that offers a no-fee credit card with rewards on each purchase. This makes an important step in our journey towards broadening our product offerings. Providing people with access to a no-free credit card aligns with our mission to democratize finance for all. The X1 stainless steel credit card has no annual fees, late fees, or foreign transaction. Further, the design innovation is part of Robinhood's DNA. They literally mentioned the design. Goodness gracious, this company is so Silicon Valley. Okay, let's see what they said. CEO of Robinhood says this acquisition will bring us closer towards our goal of serving the entirety of our customers' critical financial needs. Together with X1, Robinhood will now be able to offer our customers access to credit. Wow, that's interesting. So if you want a credit card from Robinhood, by the way, they paid $95 million for this. Then they're going to be able to offer you credit. When founding X1, we set out to create a different kind of credit card with an unparalleled experience for customers, similar to Robinhood's mission to make our financial markets more accessible to all. We share the same ethos in joining together with Robinhood to be able to offer an enhanced credit card experience. You know, this is interesting to me. Let's take a look at Robinhood stock. Again, the reason I'm getting a little bit more excited for Robinhood, I still have not initiated a position yet, is because I use the product every day. And so for those that don't have access to Robinhood in their markets or wherever they live, this is one of those products I use this product more than I use like Instagram or Facebook. It's just because your money's there, right? So you're looking at it every day. And so if you have any bias against Robinhood as a pure product, you just got to think of it as someone who's like, you know, in their 20s that doesn't want to use E-Trade or Fidelity or whatever. Like, why would they want to use this type of product? Because it's cool. It makes sense. Using it is super user friendly. The UI is updated constantly with more features. And then on top of that, it's a market cap of $8 billion with $6 billion on cash, and they're going to be GAAP profitable either next quarter or the quarter after that. And if MAUs are trending upwards, MAUs were trending downwards 2022, which makes sense, right? Because it was a bear market. No one wanted to trade. Even though their ARPU, their average revenue per user went up because people were still trading equities, options, and crypto, even though the amount of trading was gone. The amount of users was down, but the amount of trading was still up in the bear market. They actually got their ARPU from $63 to $77, which is not bad, you know? If we are entering a bull market, more people will download Robinhood. It's that simple. More people will download Coinbase, etc. It's just going to happen. And if that's the case, and Robinhood's going to get to GAAP profitability within this quarter, or at least by the end of the year, 2024 shouldn't be the worst year for Robinhood. And at $9, do you think the company can be worth $20 billion if it's worth $8 billion right now? It's something to look into, at least. I'm still doing my due diligence, but it's definitely something to look into a little bit more. Tesla now at 254, Nvidia 426, Spotify 154. Where's Palantir? Palantir is 1432. Palantir did introduce a new product yesterday, or it's an existing product that they're starting to market more called FedStart, where they're going to be leveraging their IL6 accreditation platform to startups and companies that want to sell to the government but need an accredited environment. So they're going to be able to use their platform to build their software products on top of in order to serve to the government. I'll be having a video coming on that later. I don't know if that's like a game-changing product or anything, but it is another way that Palantir is leveraging their IL6 accreditation to other customers that could potentially be buying it. Webull also follows GameStop trades, but you never hear people complain about them. Yeah, the whole freezing GameStop stuff is just like, look, it's over, bro. It's done. At the end of the day, do you care about making money or do you care about your ideology? If Robinhood's undervalued, it's undervalued. I don't give a shit about what they did in the past. I care about, can they make money? And so if they can make money because they're undervalued, then that's the most exciting thing to me. Amit talks as fast as an auctioneer. Haha, love it. Go all in, Amit, at the cowbell. Appreciate it, Canman. That is kind of the goal. That's like, we're just going through all these stocks and we got to get through all this news. MAUs will increase as the market heats up. It's a rising tide lifts all boats play, but Hood is very good at capturing those brand new to the market late in a bull run. I agree. That's a great point, Crossroads. If a bull run is happening and you're late and you just found out like, oh, I should be investing in stocks. I should get some Ethereum. I should get some Bitcoin. I should buy some Tesla, whatever. Robinhood's there. And I haven't seen a Robinhood advertisement in the past year. And that's good because they realize we shouldn't be advertising in a bear market. When the bull market happens, I think they're going to start re-accelerating their advertising. And as a result of that, that is probably going to lead to better levels for user growth in Palantir. Let's take a look at some of the macros by what mainstream is saying and see where we go from there.
More on the current state of the markets. We're joined by Sarat Sethi, DCLA managing partner and portfolio manager. He's also a CNBC contributor. I was racking my brains. Has Sarat been bullish or bearish? And I realize what a genius you are because I have no idea.
Well, I would say that, we have a diversified portfolio, Joe, and to the point that you made, look, we're taking some money off the table of some of the winners. They've done really well, and it's time to kind of look at some of the fallen angels or stocks that are going to do well. We're in a rising rate environment. The economy is slowing. The Fed is causing the economy to slow. So I want to be in areas that have not participated in this rally. Dom was talking about the home builders, but you look at some of the, some of the stocks in the technology world. They're great companies. I still want to own them. But when you've got 50 to 100% gainers in 3 to 6 months, it's just wise as a fiduciary to diversify your portfolio and put it in areas in healthcare companies like a J&J or a CVS. CVS trading at 8 times earnings. J&J solid earnings international. We're also looking at companies that are going to benefit from a lower dollar. I mean, as rates are increasing rest of the world faster than we are here, we want to benefit from those type of companies as well. So I think a diversified approach here and looking at fallen angels. Sorry, Joe.
No, we've got some crazy.
There's somebody
got some
drilling
crazy
upstairs,
sounds.
Surratt. It sounds awful. And Joe's
Sound effects.
Yeah.
Special sound effects for you, Surratt.
I said I wish I hadn't eaten that. Oh, Surratt, that's not.
Bro, what is going on in the CNBC office?
That's crazy sound.
It's not me.
No, it's not. Yeah, well, I don't know. Hey, Surratt, do you do asset allocation? I mean, do you do 60, 30, 10? Do you do anything like that at DCLA? Are you always 100% invested? I'm just trying to get an idea about whether you missed this entire rally, whether you were at a 5 in terms of bullishness. Were you at a 10? What, are you surprised that we got 35% in the NASDAQ right now? Did you miss it? Did you fully participate?
We're invested according to a client's allocation. So it's not that we'll miss or try and time it. It's just based on a client's objective. So if you're in equities, you're going to be fully invested. It's if you add new capital, that's where it gets selective. So we've participated in the rally. Have we been overweight technology? No. But we've been selective as to where we own. So some of the stocks that I mentioned, the Oracles, Nvidias, Microsoft that we do own, it's just that I'm just more cautious and I don't want to chase some of these winners with new capital. I want to actually diversify and take some of the gains.
Okay, so while we finish up the clip, do you guys agree with him? Because he sounds pretty reasonable, right? He's up 50 to 100% on some of these winners, especially the Magnificent Seven. Those 7 companies holding up the S&P 500. Do you agree with him that it is responsible fiduciarily to take some off the table? Or is it kind of stupid given these stocks have a lot more room to run?
Do you think, Surratt, that we'll get another 50 basis points? Or are you smarter than everybody else on the Fed? That we're waiting to see what happens?
Yeah, I mean, look, I think if you talk to the Fed even a few months ago, they wouldn't have expected where we were now. I do think we're going to get some more, at least one more. They're doing the smart thing, which is waiting to see how the data comes through, waiting for the lag effect. But I do think that if rates keep where they are, which we think they are, we don't think they're going down in the next year. And that's where valuation is important. So a big part of the market thinks rates are really going to drop in 12 months or 18. And that's propping up some of these more kind of speculative stocks. So I think being diversified and finding areas that have good cash flow, good balance sheets is kind of where you want to be. So look at cable companies like a Charter or Comcast. I think those have some value in there. And then some of the fallen angels and financials. Look at a Morgan Stanley that has come down, but it's really much more of a asset management, wealth management firm than a pure lending bank.
I know that's music to Chris's ears right now as he says, look at financials. Yeah, Chris has been saying on the pod, Finance Junkies a lot. Look at financials. Financials is a place where there is a lot of recovery. I just read an article on Truist yesterday. Man, this bank is just, even if Q2 is not amazing, which for a lot of banks, it probably won't be. Oh, it is Palantir below. Look at that. Palantir below 14. There it is. Palantir is now below $14. What I was going to say on Truist is just like it's undervalued right now. And even if Q2 is not amazing, it is still so undervalued given its price to book and where it should be for a typical bank. But that's why it's pretty down right now. And it's going to be a nice recovery. Palantir, there we go. Under $14. This is a 4% day down as we had a 7% day down yesterday. The whole market just crashed. The whole market. I'm looking at it. I'm looking at it. SoFi's at 837. Palantir's at 1390. Yeah, look at this. Do you see this on your screen? The only things that are up are Adobe and Microsoft. If you look at your portfolio, everything's probably red. Everything I have is red. Red. Lots of red. It's feeling like fucking 2021 in this bitch. What's going on here? This is very red. Open Door's at $3 now. When did Open Door get to $3? Interesting. Yeah, things are red. We've got a red market, folks. This is a red market. The market expects a rate hike. The market did Jpow say? I know he's talking again today. He might have said something, but what he said yesterday was not exciting to the market. And so we got a decline. Palantir recovering just a little bit at 1404, but we are in shaky territory. If we fall below 14, 12-13 is very, very possible. 12-13 is very possible. Same thing with Sofi. You fall below like the 8-10 range, you've got 7s very possibly ready to go. Now, again, for those that have been waiting for a dip, I don't think this is the dip yet. I think there might be a little bit more pain, but this is definitely a dip. If you wanted to participate in a dip, Palantir at 13.90 is way better than Palantir at 17. I just wouldn't go all in on any type of a dip. Open Door now below $3 as well. Amit, what platform? It's Webull style. I responded to you in the chat before. It's called Webull. Webull is the platform. It's free to download, and then you can use it as well. Yeah, I just see your comments, Palantir before 14. I guess I didn't see that right when the video was going on. But Chris says he's patiently waiting. His hedge positions are printing. We had a little debate last night on Finance Junkies of should you buy puts or not. And, people thought Chris and Vitaly were going at each other. Guys, this is what we do. It's a podcast, right? Like, we all love each other. We all care about each other, but we get into some heated debates. It's fun. And so Chris's argument was, look, buy some damn puts. Vitaly's argument was, no, just DCA. And it's an ever ongoing debate we're always going to have. And sometimes one is going to look more smarter than the other. On a day like today, Chris looks a little bit smarter than everyone else because he has some puts, right? And it's just kind of how that goes from there. Enphase at 158. What? Chris, Enphase getting to some levels. I know you like 140, but Enphase getting to some levels. Chris has been waiting for Enphase to get down here. It's Enphase skyrocketed from 158 up to 183 over the past 2 weeks, right back down. Wow. All those gains gone for Enphase. All of those. Everything Enphase got to. Look at that. Got to 187.99 on June 2nd. Came right crashing down to 158. Tesla 256. So Tesla's not giving up. I mean, Tesla from 276 was probably going to come down, but it's not giving up that much of its gains. This is why when I asked Warren Redlick, should I be buying at 279? And he was like, sure. I was just like, okay, bro, whatever you want to say. Sure. We should just buy at any price at that point. And I love Warren, and I know he's talking about 2030, but like there's obviously a better way to buy Tesla than just at 279 when it, it's no, you don't fucking buy Tesla at 279. That's not just like you don't buy Palantir at 16. You don't do that. You wait a little bit, just a little bit. You get a little bit cautious. You don't get that excited. Warren is an ultra bull. I agree. And I respect it, and I'm an ultra bull on Palantir, but even I've been saying, for the past 3 weeks, hey, I don't think 15-16 is a great buy. And again, 2 years ago, I would have said it is. And that's where I think I've changed as an investor. I mean, I do a Palantir live stream every single day. You can go through all the live streams. I'm like, yo, 15-16, I'm not buying, so I don't think you should be buying. I'm finally starting to say DCA at 13 might make a little sense, but 15-16 just doesn't make sense buying at the top, especially as it's run up 160%. Could it go higher? Sure, but that's still 150% gain you're buying at. 2 years ago, I would have said 15-16 is a great price, and that's why I think valuation has started to become a little bit more of something that's real to me to understand. Amit, why didn't you mention the cage match? Oh, yes, we have to mention this. All right, so we'll get back into the market in a second. Elon Musk will be fighting Mark Zuckerberg. It is officially happening in a cage match. Okay, it's not officially happening, but this is crazy that this is actually going down. So Musk is coming out with a Twitter competitor called Threads. It's going to be what it is. And then Elon says, I'm up for a cage match if he is, because someone said, oh, you guys are fighting, Twitter and Facebook. And then Mark Zuckerberg screenshotted it and he posted it on Facebook and he said, send me the location. And then Elon says, Vegas Octagon. I have this great move that I call the walrus, where I just lie on top of my opponent and do nothing. It's actually really funny. It's really funny, actually. Now, the thing is, Elon's not a healthy guy. Elon even said yesterday on Twitter, he was literally like, the only time I work out is when I lift my kid up in the morning. So I think Zucks would actually beat the crap out of Elon, because Zucks has been doing MMA style training. That's just kind of how it is when it comes to what Zucks is doing right now. But it would be really fun to see if that happens. I mean, could you imagine what would happen? This is what Elon says. The most entertaining outcome is the most likely. I've confirmed that Mark Zuckerberg is serious about fighting Elon Musk. The story speaks for itself. A Meta spokesperson said, "This is all great entertainment, but it probably won't happen." Now, granted, Elon's not the most healthiest, so I don't know how he would be, but it would be super funny to actually see this happen. Elon got Neuralink. Elon's got Neuralink. Yep. Neuralink is going to be fine. That's where he's going to be saving him. I really don't need to see this cage match. It would be great TV. It'd be great TV. Okay, let's take a look at some other stuff going on in the macro. Let's get some Tesla analysis actually a little bit. Let's see what people are saying. Oh, actually, let's click on this one. This one seems a little bit more interesting. And this one impacts Tesla and a lot more. So this company, this bank, thinks the Fed goes to 5.5 by Christmas, which would be not a rate pause, but definitely a rate hike.
To talk more about the rate moves around the world and the impact on stocks, John Bilton is here.
Again, if you're new, we talked about in the morning, Bank of England raised the rates by 50 basis points today.
He's the head of global multi-asset strategy at JP Asset Management. I don't know if you had a chance to hear Barry Sternlicht's comments in the last half hour. He thinks just got to stop. What do you think?
I heard that. Well, look, I mean, I think the central banks are in a tough place. I mean, there's no doubt that inflation remains high. They were somewhat slow to come through. And I think you're now starting to see a bit of differentiation across central banks. I think what the Fed have done actually is fairly sensible, and they're using a lot of language to talk the market out of expecting a very quick series of rate cuts after they've reached their
What do you
terminal
think
rate.
Bostic was saying yesterday?
I think he's basically introducing the idea that there's two-way risk today in markets. You know, we have got relatively high inflation. There is quite a hot economy, but at the same time, if you look at the amount of hikes that have come through already, they've yet to fully hit the economy.
But was he being hawkish or was he being dovish?
I think he was being pragmatic, and I think that's a bank like the Fed have got the opportunity to do that, and I think the slowing of pace, you know, a little bit more language, a little bit less action is actually giving the opportunity for them to manage.
So what's your gamble?
expectation.
What's your gamble through Christmas, and what's your gamble come 2024?
Well, we think that the Fed are going to be up to around 5.5 or so by Christmas. We think they're going to hold pretty steadily through much of 2024. We think that there's, you know, a elevated but not outsized risk of recession. We think that the economy remains fairly strong, an inventory cycle to come. And so we've got a reasonable amount of support. That probably leaves the Fed on hold for quite some time. Think about the 1990s, the middle 90s. They raised rapidly through 94 and then sat on it for a prolonged period.
Multi-asset.
Which, by the way, I agree with. I think this is a pullback going into a larger bull market, even if the pullback lasts for the summer. I do not think this is another necessarily bear market that we're getting, which this guy seems to agree, even with rate hikes going up.
Asset strategy. You invest in a lot of different assets.
We do. We do.
like
We have a
bonds?
wide opportunity set. Yeah, we have bonds, we have stocks, we have
Would you
credit.
buy bonds now?
We do buy bonds now. We think that you've got a decent amount of coupon return from bonds. Yes, we have to think about carry versus cash. But if you think about the spread of outcomes, in a base case, bonds are going to give you some ballast in the portfolio. Corporates are giving you a decent pickup in carry.
Yeah.
And if you look at what's happening in the corporate space, earnings have held in better than expected. So
Can you get 4% on tax-frees right now? I think it's closer to 3, isn't it? That's been offered to me, and 4 would be pretty good. Can you get 4?
Well, we're taking mostly within the Treasury, the corporate space.
You don't do munis.
Portfolios. Not so much in terms of our own portfolios, but in terms of what bonds are offering you, is a lot of ballast in portfolios. Downside protection were the worst to happen, and also if you've got duration in a portfolio in a multi-asset sense, you've got more opportunity to lean into risk on the other side. Credit spreads, currencies like the euro, stocks selectively where one feels that the earnings cycle is beginning to look a little bit more positive. It allows you optionality in the portfolio.
Where are you on the equity side? You said selectively. What does that mean?
So
Who are you thinking about? Can you name some names?
Well, we don't really go down to the single stock level, as you know, but certainly when it comes to regions, the interesting thing is we're looking outside of the US. I mean, earnings cycle in terms of downgrades is probably towards the end of its cycle here in the US. But if we look at places like Japan, and bizarrely enough, despite today's news, the UK, you can actually start to pick up some inexpensive, healthy dividend streams, some strong structural re-rating in the case of Japan. So I think there's a lot to do in the equity complex if you look beyond the S&P 500.
You have a Bitcoin take?
we don't really think about Bitcoin in a multi-asset portfolio since it's so volatile. Just a tiny amount of Bitcoin and it will blow out your tracking error budget. So we tend to stick to those financial assets where we know how they ought to behave in a portfolio.
Like Netflix. We had the argument about Comcast, and then I was thinking about Comcast was.
I kind of agree with him in the context of Bitcoin. Again, I don't want to be a super crypto bull. It's hard for me to sleep at night because I don't know how to understand it that well. All right, market's starting to recover just a little bit. Let's get into that as we end out the next 5 minutes. Thank you, 500 people, for being here. I hope you're having a great week. It is Thursday. Hope you're having a great morning, and I hope you are doing okay. I know it's been a interesting week in the markets, but most stocks still are doing pretty all right. Enphase now 157, so Enphase still going down. Truist down a little bit. Palantir recovering a little bit from down below 14. Robinhood at 945. Sofi 847, recovering a little bit from the lows of 830. Nasdaq. Let's take a look at the Nas of the DAX. Nasdaq. Where are we at on Nasdaq? All right, Nasdaq's green. Green. 13,521. We're in a little bit of the green. So now the indexes are up a little bit. And that means the S&P 500 is down a little, but it's basically flat. It's down 0.05%. So pretty much not down or up as much. Tesla at 256. So it was down at 249, recovered up to 256. Again, DICE, it's in the watch list because Eli Lilly acquired them. So that was a nice little acquisition for them. They were up 37% on Monday on that acquisition. NVIDIA at 429, C3 AI at 38. By the way, I had a really good Palantir interview yesterday with someone called Amir. You guys might know him in the Palantir community. And this guy, he was following Palantir before 2020, but he bought in 2022 because he was looking for a better price. And it was a really good interview. I think you guys are going to enjoy this. He gives a new take on the SPACs that I don't think we've heard before. He really talks about competition in an interesting way. That interview, I'm pretty bullish. That interview made me want to buy more shares. And it takes a lot for me to get even more bullish on Palantir. So it was a great interview. I think you guys will enjoy it. And he talked about C3. That's why I'm bringing it up. And, the more I research this company, the more I'm just like, bro, I realize it's up, but I really do not think they're selling anything that has such a phenomenal moat that's going to allow it to thrive over the next 5 years. Whereas when you look at something like Palantir and just the clients they're working with a Cisco or a BP or a Jpow, it's just, it really might be one of those stories that is one of the most coolest stories over the next decade if they're able to do what they need to be able to do. And everyone thinks they're kind of not able to do what they are able to do. And we also talked about how Peter Thiel and Alex Karp seem like they're losing when they're actually not, because they're just setting up a foundation of growth. Remember Karp, one of the points Amir brought up is Karp is still driving the company to 4.25 billion of revenue in 2025, which is 30% CAGR growth. He has not walked away from that. In 2022, even when they took off that 30% revenue growth target from the earnings slides, he said, I am on track to get this company to 4.5 billion or 4.25 billion, whatever it is, in 2025. If that's the case, and we see that revenue acceleration, we get there, and we actually CAGR at 30%, there's not many companies going at 30% in the software space year over year that don't have, crazy valuations other than like Snowflake, right? So we'll see. Yo, Amit, I remember when your streams were averaging 100 peeps. Keep it up, buddy. Yeah, thank you, Broccoli Bob. I appreciate it. It's the journey. It's the journey of continuously doing this, and it's been super fun. And I was just as excited at 100 as I was excited as 500 because it's the most fun thing in the world to spend the morning opening up the markets with you guys. To be honest, the only stock I want down is Enphase. Started position at 180, doubling it when it dips below 150, loading the boat at 120 if it gets there at least. Yeah, I agree. Enphase is one of those companies we've just talked over and over and over again, but the thesis is clear. Solar is 1 to 2% penetration. Solar is going to be more than that. Enphase is one of 2 companies that builds the microinverters that actually allow solar panels to function. And so rates being up are bad for Enphase, but it's great in terms of causing it to crash, because that just creates another opportunity for people to actually load it up. Alex Karp farts. Amit, this makes me more bullish on Palantir. This is actually not a bad argument, because as someone alleviates the stress that they have in their system through flatulence, that gives them more mental clarity to become a better CEO. And so I think you were actually correct on that analysis. Amazon up 2.5. Yeah, Amazon's up. Amazon, it got upgraded today. I didn't know which bank upgraded it, but it did get upgraded now at $127. All right, Palantir at $14.10. We'll see where it goes for the rest of the market. That is it for me. Thank you guys so much for joining. I have an interview coming out with someone who uses Palantir every day. You guys might know him at 11:30 a.m. That interview will be out. I have another video probably later today talking about Palantir's new product with FedStart. We'll have daily Palantir live stream at 9 p.m. tonight. I have a meeting, so I should be able to make the 9 p.m., but if that meeting goes a little bit longer, it might be a little later. And then Finance Junkies at 10 p.m., and we'll go from there. That's it. Thank you, everybody. I appreciate it. Have a great, great day. Let's see what goes on in the markets, and I'll see you guys later tonight. Thank you, everybody, for joining. Bye-bye.